The broadcast is now starting. All attendees are in listen-only mode.
Hello, this is Jennifer Schaus, and welcome to our Government Contracting webinar series. We are covering 10 weeks of various topics on government contracting. We are in week 9, so next week will be our last week. The full schedule is on our website under the webinar section. All of the recordings are typically listed there same day below the schedule, and they are segmented by topic. A little bit about us. We are based in downtown DC, provide various services for federal contractors. We are not a law firm, but we do provide consulting on 8A certification, GSA schedules, compliance issues, proposal writing, business development. And we do host networking events and seminars throughout the year. You can find those on our website under the events section, or you can sign up for our newsletter as well, which reaches about 11,000 government contractors. My background is listed on this slide, but more importantly, I'd like to introduce you to Mark Amadeo, who's a good friend and colleague for several years who helps a lot of our customers with government contracting issues. And today, Mark is going to be speaking about contract closeout. So Mark, I'm going to turn the floor over to you. Thanks for joining us today, and I look forward to hearing your presentation.
Absolutely. Thanks, Jennifer, for having me, and thanks to everyone who could join us today. So there is information about me on the slide, and my contact information is up there as well. So if you have any questions, just feel free to reach out to me. Again, I'm Mark Amadeo, and I'm the principal of the Amadeo Law Firm, which is the legal boutique with offices in DC and in Maryland. I have over 20 years of experience as a government attorney and in private practice, where I was a partner at a DC firm before starting my own law firm. A little bit about the firm. The firm has offices at 3 locations, and its primary focus is on federal government contracting. And the firm's clients have been of all sizes, from startups and entrepreneurs to mid-sized and large Fortune 200 companies. And we help clients with all of their government contracting legal needs, whether it's putting together teaming agreements, subcontracting agreements, joint ventures, negotiating with contracting officers, or assisting with modifications to maintaining FAR and DFARS compliance. Now, the firm also helps clients protect their valuable technology in dealing with government and private sector partners. So today we're going to talk about contract closeouts. Now, there may be a tendency to view contract closeout like what happens at the end of a holiday or birthday party. You know, the government has gotten what it wants, the contractor has gotten mostly paid, and now it's time to clean up the boxes and the wrapping paper. But everyone would rather be doing something else, right? I think a better perspective may be to view it as at the end of a marathon where you've completed 26 miles, you've done all the hard work, but you still have to cross the finish line, and your time has to be taken and tabulated, and your time has to be verified. So all of these things are important in order to document your accomplishment, and so you get credit for your hard work. So when we talk about closeout, what we're talking about is the closeout of the government agency's files. Now, under the Federal Acquisition Regulation, or FAR, the contracting agency is supposed to maintain records of each contracting activity. And these files are supposed to provide a complete history of the transaction, and they serve several purposes. So on an ongoing basis, they provide contracting officers with background information, and they serve in order to make informed decisions. They also serve to support actions that are already taken, and they contain information for reviews, for investigations, and to support litigation and to respond to congressional inquiries. Now, there are actually 3 categories of files that agencies have to maintain. They have to maintain files for canceled solicitations, for contracts that are performed, and a general file for each contractor that contains background information about the contractor, like its past performance or its capabilities. So it's the contract files that we're going to focus on today and that are subject to the mandatory closeout rules. Now, there are actually 3 kinds of files that FAR says constitute the contract files. So if you think of a contract file as one of those brown accordion folders, under FAR, there are generally supposed to be 3 manila subfolders within that main folder. And under the regulations, If possible, those 3 files should be kept separately. Now, the first file is what's called the Contracting Office Contract File. And FAR has 42 examples of the kind of information that can be contained in this file, and they include documents that provide background for the procurement, like set-aside decisions, the solicitation, quotes and proposals that were submitted, and award notices and post-award notices. The second file is the Contract Administration Office Contract File. And this is the file that contains information about the executed contract and the contractor's performance. And there are 20 examples in FAR for the kinds of documents in that file, and they include the contract and any contract modifications, consents to subcontract, and property administration records. And the last file is the Paying Office Contract File. And that file contains any information about prerequisites to payment, as well as invoices, vouchers, and records of payments. So getting back to my brown accordion folder analogy, when you hear about contract closeout, what's really happening under FAR is that each of the 3 subfolders is being administratively closed. Now, the regulation under FAR sets out guidelines for when the file should be closed and how long it should take, and those times are listed up on the slide. But if you look at the times for closing the Contract Administration Office file, and remember, this is the file that documents contract performance, the time frame depends on the kind of contract involved. So for a firm fixed price contract, which doesn't require verification of cost, the time frame is generally within 6 months of physical completion of the contract. Meanwhile, the guidance for cost contracts above the simplified acquisition threshold says that they can take up to 20 months after physical completion of the contract to close. And in the case of contracts that involve indirect costs, the time frame is even longer. It can be up to 36 months after physical completion. So let's talk about physical completion. The FAR guidelines set a period for closing the administration office file that starts from the time that the contract is physically completed. And there are specific rules for when that happens. So if a contractor is providing supplies or services, that contract has to actually be completed, meaning that all deliveries have to have been made, inspected, and accepted, or all services provided. And any options have to be expired, so there's no possibility of continued performance. Alternatively, physical completion happens when the government has given notice that the contract has been terminated completely. Now, likewise, when you have rental, use, or storage contracts, there are 2 ways that contracts are physically completed. The first is when the contract period expires, and the second is when the government again gives the contractor notice of complete contract termination. So we talked about a prolonged period of time for closeout of the Contract Administration Office file. And this slide here shows why. After physical completion, the Contract Administration Office is required under FAR to verify 15 separate items. Now, we're not going to go through each of these right now, but we'll just touch on a few. So some of the items relate to IP management. There's the final patent report clearance and the clearance of the final royalty report. So for you technology companies out there, if you have a patent rights clause in your contract, then you need to get your Form DD 882 report of inventions filed so that that patent report can be cleared. Now, other items on this list relate to government property, like the plant and property clearance reports. So if a contractor acquired government property during performance or worked at a government location or installation, the government property has to be returned and accounted for. Other items include settlements of subcontracts. So prime contractors have to be all paid up on all of their subcontracts, and any subcontract that requires closing has to be closed. Another important item is settlement of prior year's indirect costs. So overhead rates for the prior year have to be settled, Either they have to be substantiated or they have to be negotiated with the agency. And this has to happen before a contractor submits a final voucher or invoice, which is also on the list. And the last item that we'll touch on is the contract funds review. Now, this review requires a true-up of the contract amount against what's actually paid out to the contractor. So if the amounts invoiced and paid by the government are less than the stated contract amount, maybe there was a contract modification along the way, or the contract included over and above work that was not actually performed, any excess contract amount may be deobligated by the government agency. So when all of the 15 items are verified, the Administrative Contracting Officer, or ACO, needs to make sure that the contract completion statement is prepared. And from the contractor's perspective, the key part is where the ACO verifies that all required actions have been completed. In other words, the contract has been performed and the contractor has completed all of the closeout requirements. So the contract completion statement is the culmination of the closeout process. But before we move on, I want to touch briefly on a quick closeout procedure that can shorten the closeout period, which, as we've seen, FAR guidance says can take up to 20 to 36 months. So first, what's so quick about the quick closeout procedure? Well, if the requirements are met, the contracting officer can negotiate direct and indirect costs quickly. Now, we talked about how the prior year indirect cost amount normally has to be settled. And the process for doing an indirect cost rate assessment and determination can take some time, and it may include an audit of the contractor's information. And this is part of the reason the FAR guidelines allow closeouts to extend to 36 months. Well, under the quick closeout procedures, the contractor can negotiate overhead rates rather quickly without having to provide an incurred cost submission or going through any audit. But to take advantage of the quick closeout procedures, the unsettled direct and indirect costs can't exceed $1 million or 10% of the total contract value, whichever is less. Also, the contractor has to have good accounting and purchasing systems in place and a record that its indirect costs have been approved and agreed to in the past. And one thing to keep in mind, the negotiated overhead rates are final and they can't be used for other contracts. So what can contractors do to make this process run smoothly? Well, first, contractors can anticipate contract closeout at the very beginning. In other words, they can have steps in place from the beginning that will make closeout easier. At a minimum, closeout should be scheduled in any project management timeline like any other project task. Another thing that contractors can do is have a detailed checklist. Now, this slide that we looked at before had over 15 items that the contracting officer has to review before preparing that completion statement. So several of them require the contractor to provide information or forms. So a good checklist will identify the person that's responsible for the task, the dates of completion, and it should be signed off by the person that's responsible for completion. And then for any items that can be accomplished with government forms or statements, I mentioned the DD 882 form before. Well, contractors should have those forms already downloaded and ready to complete. Also, contractors should use the quick closeout process whenever possible. So if it applies and the administrative contracting officer is not using it, then contractors should request that it be used. Another thing that contractors can do is keep some of their A-team or key personnel on the project. And often once performance is done, it's like everybody's on to the next project and key personnel are ready to move on. And there may be financial incentives that's tied to either moving on or not being available. But for continuity's sake, it's important to keep key personnel in the loop, and financial incentives may have to be adjusted to do that. And then lastly, another thing that contractors should do is consider a closeout conference, both internally and with the agency contract administration office. And this is to make sure that everyone is on the same page and knows what's left to be done so that there aren't any surprises at the very end. There are also a few things that contractors can do specifically with regard to a few of the items on that list that we looked at before. With regard to subcontracts, contractors should try to close out their subcontracts as soon as the sub's performance is complete. So don't wait until the last minute to review the subcontract agreements and close them all out. Or better yet, if you don't need to have a formal closeout process in your sub-agreement, then you should leave them out. On payments, we said that the contracting officer needs to true up paid invoices and vouchers against total obligated amounts. Well, to quickly clarify any ambiguities or discrepancies, contractors may want to track those obligated amounts and the contract payments throughout contract performance, and they need to keep their payment records up to date. And then as soon as indirect rates are settled, contractors should reconcile their vouchers so that they can file for their final payment. And then with regard to plant and property reports, contractors should consider maintaining an accurate rolling inventory of the government property that the company has access to. And then at the end of performance, they may want to do a walkthrough and inspect all of the workspaces to make sure that there's nothing that's going to be left behind, or that they don't have access to government property that they shouldn't when contract is completed. So the question may be, why should you care so much? I mean, you might think, hey, these are the agency's files. Why does it matter to me? Well, first, if closeout is a nightmare, this is the last impression that a company is going to make with an agency. So if you've done a good job providing value with your supplies and services, the last thing you want is a delinquency letter that says, hey, you're late on submitting your forms to complete the clearances. Also, some of these things are actually part of the contract, like submission of the final indirect cost rate proposal, which is in clause 52.2167. Another good reason to kind of stay on top of the closeout is the closeout is when you get your final payment. If you're working under a time and material contract, it may be that the agency has held back any retained or obligated funds if you have FAR clause 52.2327 in your contract, and this is the time when you get that money back that was owed to you. Another reason to strive for a smooth closeout is to conserve company resources. So if you have key personnel and program managers that are looped in, the sooner you wrap up closeout, the sooner they can move on. And a cleaner process, I think, will save everybody's time, so you don't have folks running around looking for documents and looking for missing forms. And then lastly, a smooth and relatively quick closeout may reduce your own costs. So if you're allocating admin costs to this process, then any time spent keeping the file open or maintaining books is just keeping the meter running on costs that may not even be recoverable. So the faster you close this, the sooner you can close the meter on costs that are related to the closeout process. Well, that's all I have for closeouts. So thanks everyone for listening. And if you have any questions, feel free to reach out to me.
Thanks, Mark. Great presentation on closeouts. Tomorrow we are joined by Mark again, who's going to be discussing contract awards under a GSA schedule. Friday we'll get into the 8A certification checklist. And then next week, which will be the final week of this series, we'll get into the various proposal sections of the GSA schedule, as well as sole source contracts. Again, all of the webinars are recorded. They are complimentary. You can find those on our website under the webinar section. Thanks again, Mark, and thanks everybody who was able to join us today.
Thanks, Jennifer.